Welcome to the Techno Fundamental Report for January 29th. You know, when you look through time and you see all these very difficult situations and you get a major sell-off in the market, 12 months later, on average, the market goes up 14%. So, we have the Ukraine invasion, we have COVID, we have the Iraq invasion. This would, kind of fall into the Greenland story, Warren Buffett argues that mixing personal political views with investment decisions is a major mistake. This happens all the time. People somehow want to correlate who's president and so forth as to why the market's going up or down. So when you really think about it, everyone kind of raves about Bill Clinton, what a great stock market we had, but you can't forget that that was when the internet was invented. So really it didn't have a whole lot to do with who was president. Institutional investors, they're the big boys. When you look at the market, it's very important to understand that 80 to 90% of the trading volume on the major exchanges are run by institutional investors. So they lack the flexibility of a small investor. So what's happening is that we're seeing rotation in the market, and it means that the money is moving out of some category and going into another category. So when you think about a multi-billion-dollar fund that this guy's managing, he's like a big oil tanker. He has something called liquidity risk. He can't move around like a small individual investor can, which is like a ski boat that could run circles around this oil tanker by the time it makes a turn. So when you go through rotation, large institutional investors have a disadvantage to small investors such as myself. So let's go ahead and take a look at something that we need to take a look at, which is the aggression index. Now, the aggression index is nothing more than an early warning system. And realize you don't want to be in a horse race. You want to take your time. You want to really think things through, because if you race and you rush, you're going to make mistakes. And so like right now, we're dealing with what we call a meat grinder market. A good friend of mine wrote this. He says, something we'll be on the lookout for, as if we do see a rash of earnings-induced breakouts. See, we're in earnings season right now. We'll put at least some money to work, but for the here and now, it remains mostly a meat grinder market out there. So basically what he's saying is that he's going to sit tight, take his time. These stocks are breaking out and then the breakout fails. They break out and the breakout fails. So let's take a look at the aggression index. Excuse me. Let's go back to 2025. Now remember, this is designed to be an early warning system. So what we're doing is we're comparing growth stocks to value stocks is basically the story here. NASDAQ compared to consumer staples. Aggressive, defensive. So when this particular ratio breaks down, historically it has led to a pretty serious decline in the market. And you can see that you got the signal because you crossed below the moving averages and you got a death cross here. You got an early warning system. So let's look at it another year. This is 2022. We're talking April of 22. You can see here, again, using the aggression index calculation, you rallied, got above the moving averages, and then started to fail, and really failed. I mean, it was a dramatic drop here in 22. I remember we sold Tesla right at the beginning of this, and boy, I'm sure glad I did, because the market really we went into a bear market in 22 and didn't come out of it till 23. So you can see the decline in the S&P 500. Let's look at another year. This is 2020, which we're talking, about 5 years ago, 6 years ago. You got the break right in here, and you can see the market followed with a pretty sharp decline. So it's an early warning system. That's what we're trying to develop here. Now, if we go back to 2018, you can see the same story. It was a little bit more tricky, though, because it was kind of a choppy situation. It just mainly said this is an early warning system. You don't need to panic. You don't need to rush out of the market or anything. Just be aware that the growth stocks are starting to falter, and without the growth stocks, the market tends to have a pretty difficult time. So here we are. This is where we are today. You can see that we made a high back here. Now, the NASDAQ has not made a new high since October. And so I'm going to talk a little bit about Michael Burry and his short positions or put positions in NVIDIA and Palantir. And he put those shorts on right about in here. So you can see we're breaking down. So we have broken down. We haven't gotten a death cross. No, we did get a death cross back here. So what we want to see is we want to see this ratio get back up here before you start thinking about getting aggressive. Now, as of the last couple of days, though, it has improved somewhat. So what's the market telling us? It could be telling us anything. It could be talking about the Japanese bond market. But I still think Michael Burry's story is an interesting story. Now, you might want to, pause your video player to read this, but he had taken short positions against NVIDIA and Palantir. And anyway, then we go here, and you can see here that we've got a surge in the price of gold. Why is gold and silver going up? Well, basically what he's saying is that we're in an AI bubble, and that when it pops, or it's in the process of popping, he's just saying that this is a really big problem. And the reason it's a big problem is that all these companies that are involved in AI, that are in the horse race, their market capitalization is 22 trillion. Now, how big is 22 trillion? Well, the whole GDP of the United States of America is about 31 trillion. So if this stuff starts to falter, it could have a shaky effect on the market. Now, this guy here, Gary Marcus, he is a leading voice about artificial intelligence. He says it's a great thing. There's no doubt about it. But he's just saying it's questionable whether these companies, because they're spending so much money, can make any money. So all in all, the market's looking pretty good. As the NASDAQ here making new highs, we've got, it's in a very nice uptrend here. So the indexes are fine. It's just that we're going through this rotation right now, which means that you've got to lighten up in some areas and then beef up other areas, and it just takes time. So that's why you don't want to be in a horse race. You want to take your time and find the next market leadership, because it looks to me that the Mag 7 is starting to kind of fade. What's going to take its place? We'll see. S&P, the index on the S&P is fine. Nice uptrend. Like I say, the indexes are fine. The long-term trend is positive, the primary trend. This is the 200-day moving average for both the S&P and the NASDAQ. We're in a bull market. It's just we're going through rotation, and you just kind of have to deal with it. So if you have any questions, please let me know. Thank you very much.